Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Monday, April the 27th, the year 2020. Let's talk trading, 1051. This is something that Walmal was talking to me about the other day, and I've got him on the line. How you doing, Walmal?
I'm doing great today. I hope all the traders out there are doing well as well, and hopefully it'll be a profitable day for all.
Yeah. Okay, boys and girls and fellow non-binary traders. This non-binary stuff is just cracking me up. Anyway, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional rather than two guys with funny names that make YouTube videos. Okay, Walmal, I'll let you introduce 1051.
So when I originally started doing the Walmal lines way back when, what I was looking for was something that was simple. I mean, I'll admit this. I tend to like to have things very, very simple. I'm a simple person, and I like things to be very, very easy and cut and dry. I don't like having to go and constantly be thinking about things and trying to figure out things on the fly. I'd rather go and do my analysis on the front end and then set some rules and just go and go by that. So the idea was that, I was looking at the pound originally, and in fact, I've been trading the pound lately again, but what I was seeing was that every hour the pound moves somewhere between 20 and 30 pips. Every hour it moves somewhere between 20 and 30 pips, which told me that it couldn't stay within a 10 pip range. And using TRO's method of, putting the sweet spot lines up there and horizontal lines, it just gave me the idea, you know what? That gives me an opportunity to win. But the problem is that when you source something, let's say you had an hour where it moved 20 pips. Well, what that can mean is it could cover the entire 10 pip range between those lines and then come out 5 and 5 on each end. Well, that's, if depending on what you're doing and how you're trading, how do you go and take profits on that? So what I came up with is the concept that I want 10 pips on a trade. And the reason why I wanted 10 pips is because I had figured out that if I won 10 pips, then I was done for the day. Hey, that could be really good. I could actually go and need one trade to be done for the entire day. That'd be a wonderful thing. So my goal is to go and get 10 pips on a trade. But the reality, as we all know, is that if it comes out, outside the zone or the Walmal zone, you may not get 10 pips. So what do? So if you're in profit and it runs up to 5 pips, what I do is I set my break even to 1. And I'm still looking for that 10 pips. And I hope that it gets to 10 pips. And if it gets to the 10 pips, you know what? Hey, I've made goal for the day. I've made as much as I need to go make. And, it's time to pop out of there. Why go and take any more risk on? If it goes and gets to the 10 pips, what I may do is that I may go and say, you know what? I may get more on this. So I move my stop loss up to 5. And that way, the worst I'm going to do is make 5 pips. So the goal of 10-5-1 is this. I want 10 pips or more, but I may only get 5. But if I'm in profit, hey, I want to go and make sure I get 1. So that's the idea of 10-5-1. Make sure that you definitely get the 1 if you're in profit. If not, get the 5. And you know what? It'd be a super day if we get 10.
Yeah, except though I've turned you into a trading addict or trading monster or monster addict. Because how many are you up today?
I'm up 32 pips for the day right now. So
Yeah.
And the thing is, I did that I was telling TRO when we first got on the phone call before, I did that in about 2.5 hours. So that's not bad. Basically two-thirds, I'm 3/5 of the way through the week on 2.5 hours. So you know what that means? It means that if I just go and tomorrow go and make 10 pips and the day after make 10 pips, I'm done for the week. I don't have to work Thursday and Friday. I don't know if it's going to happen. I may have a losing day, but that's trading. But it gives me a good head start for the week, that's for sure.
Yeah. Well, right now we just started the top of the hour, so we got a long trigger at 30 and a short trigger at 20.
Right. And let me talk about that 30, because on my chart anyway, I don't know about your chart, it did penetrate that 30. But on Friday's video, if you go back and listen to it, I said I always look for that second penetration. And that's a perfect example of where it penetrated the line, but it just had no follow through on it. And so that's the reason why I would not have taken that trade. I want that second opportunity.
Well, which are you talking 30?
At the pound, I'm sorry.
Yeah, well, I'm
looking at the pound.
Yeah, I'm looking at the pound also. So when you say 30, are you talking about
You know what? I am so sorry. I'm looking at the previous 5-minute candle. I didn't realize that was the wrong candle. I'm so sorry, guys.
Okay, well, we're coming up to the 20. Now, we've actually crossed and closed below the 20 here. Looks like 3 times, and we've opened. I'm just looking at my eye, using my eyes. I'm not even looking at the gauges. And I see we've actually opened below it 4 times. So, but this would be the first touch of the 20, so you would pass up. Is that correct?
Right.
Yeah.
I probably would pass up that trade, yeah.
And you'd wait for a second touch, yeah.
I'd wait for a second touch on that.
And hold on. 1 second though. Let's just define touch. And when you say touch, you mean that the 5-minute candle touches. So you'd wait for another 5-minute candle, right?
That is correct. Yeah.
Yeah.
When I define touch, I mean it actually goes. Let's say it went down to 24.20 and just touched it and reversed right off it, or even if it went down to 24, 19.5 or something like that, and then reversed off of it.
Okay, well,
still wait for that next candle.
Okay, so it's done that. In fact, as you were saying it, I believe it hit 19.6 on my charts, and then of course it just reversed up. So right now you're going to sit on your hands for the rest of this candle.
That's correct.
Yeah,
I'm going to sit on, and the thing is, I'm going to miss some trade opportunities because of that.
But
that's okay, because. The thing is, the reality is another train will come in the station at some point in time. If I miss a trade opportunity, that's okay. I want to go and have that ability for that to go and hit there a second time,
Right.
And that's just the reality of what I've noticed in the market with this particular pair. It may be different with other pairs, but I know with the pound, that's what you need to do.
Yeah, so right now it's touching it a second time, this candle. It's right at 20. But once again, your rules say wait.
It says wait, and that's and I think part of that is that's what that does for you also, is it teaches you some discipline.
Yeah.
It's very easy to just go and slam it on, and then next thing, you're either sorry or happy, But, the thing is, the biggest thing about trading is having some discipline, and this teaches you some discipline doing this.
Yeah. Yeah, you were asking me about yesterday, and I was basically, I've been telling the traders, who they asked me if I'm going to mentor. I said, well, I mean, there's not much to mentor. It's like when the price hits the horizontal line, you go in the direction price is moving. That's like the end of mentoring or the end of trading here.
Right. Now look at that candle right now.
Right.
That's exactly what happens so often on the pound. They touched it twice, all within that 5-minute candle, and it's reversed back up 6-7 pips at this point.
Yeah, it's reversed at least. Yeah, it's 258 on my chart right now, and it's actually turned the. It looks like it's trying to turn the H1 green here.
Yeah, my H1 is actually already green, and I'm at actually 2.7, 2.8.
Yeah. Now it's coming up. It's almost at 30. So would you? And you wouldn't take the long trade either, right?
Not the first time, no. And it's just the discipline of going and doing that. I wouldn't take that long trade. Right now, I take it on the next candle. If this touches it, I take it on the next candle.
Right. And here we go. And next candle just opened.
Right. And I mean, we missed touching that by about a pip, at least on my chart. And then to go back 2 candles from that, you did penetrate it there, but it pulled right off of it. So right now we've got a H1 candle, that's about 8 pips in range, and it's just it's building some type of consolidation range here. It's going to break out of it. There's no question about it. But I don't know which way. Now look how that's coming back down again.
Right.
There's a good chance that it's going to come down, and if it busts through on this candle, I'm probably going to go and I would probably take that trade. But I'm going to be real careful because that 5-minute candle will now have to go and just travel 7 pips just to get to the entry point. Most, H1, M5 candles don't go that far. So I may be looking, my rule is 10-5-1. I may be cutting it short a little bit just because of how far it had to penetrate.
Yeah, because right now I just brought up our the new indicators I wrote. So we've got the M5 ranges here. And like you said, we see that the biggest range was 7.3 on mine, and then we've got a bunch of, we got a 3.0. And prices moving up.
There it goes. So I would probably have taken that entry there. I don't know what would happen, but
we'll find out.
Yep, we'll find out. Maybe a loser, maybe a winner. But my my stop losses would be in place, and I would be in a situation where, I'd be okay, because I know that it's within my trading plan.
Yeah, because one of the things we also talked about last week when we were on the phone, we weren't making a video about, or maybe we did. We talked about set and forget. And just see what the market does, because the market's going to do what the market's going to do, whether or not you're sitting there watching each and every tick.
Right. It's going to do what it's going to do. The only thing is, are you disciplined to allow it to do it? And, make sure that you have a trading plan in there that makes sense for you. And I will go and I will admit that, you're sitting there, if you're sitting there and you're trading, a penny a pip, who cares, but what if you're trading $40, $50 a pip and it goes against you 5 pips? Well, now you're out $200. So that makes it harder. But at the same time, if you got a trading plan that works statistically, it works, maybe that's the best method. And that's kind of what I do with the 10-5-1. And the idea is that I have something set in stone of what I'm going to do, and I tend to be a very disciplined person, and so because of that, I can do that. Some people can't. Maybe a better thing for somebody to go and do is to would be just to go and set up, get an EA that does nothing more than goes and puts your stop losses in, and they're all in place, and sit on your hands, and I don't know, go get yourself a cup of coffee and let it happen.
Yeah, but I was thinking that this trading, in a way, it's almost like a carnival game, in the sense that step right up, and you're gonna pick something. You're gonna play a game that is basically chaotic. Some people say the market's random, some people say it's not, but it doesn't matter. The fact of the matter is, you can't predict with 100% accuracy what the market's going to do next. If you could, there'd be no market.
You're exactly right. There'd be no market because there'd be no point in it, because the thing would happen. What would happen is everybody would just go and agree upon a price, and if you put this into perspective of gasoline prices, if there was no market in gasoline, gasoline would be 99 cents, and it would always be 99 cents to the end of time. But that's not reality of what a market is. What's happening is you got a bunch of people sitting out there. Some people saying that the pound right now is worth 1.2426, and other people out there saying no, it's not. It's worth 1.2424. And so there's an argument that happens. There's a fight that happens, and that's what drives the market up and down, and that's what moves it. And so because of that fight that's going on, that's what causes the market, and you can say that it's random. You can go and say that it's ordered chaos. There are all types of theories out there what it is. All they really are is just models of what's really going on.
Yeah, and you know what, Walmal?
We're out of time.
I tell you, it's the fastest 15 minutes, it seems, when we start talking trading. So, boys and girls and fellow non-binary traders, Just remember when you trade, it's not what you trade, it's how you trade it. So go out there and drain the banks.